markets have opened pretty strong. Do you think that's an indicator that the AAA reaffirmation of the Moody's rating has been well received?
Oh, it all helps. Look, I think gone are the days when that AAA credit rating was a real market mover, but it's always encouraging to see the AAA rating reaffirmed. It's better to have it than to have, say, junk status on sovereign bonds. We know what that means. It means very high interest rates and difficulty raising debt. So the fact that we've had the AAA reaffirmed with a stable outlook is encouraging, and it's perhaps a sign that, while the economy is going through a deep recession right now, there's no question about that. We saw the labour market numbers last week being very poor, that perhaps we're skating through this. Things will be a little bit better once we get to the September quarter, and the blowout in the budget deficit, the level of government debt, while huge, there's no doubt about that, mightn't be as fearful as some are thinking.
Look, for our viewers who don't track every different market health marker that's out there, why is this AAA credit rating from Moody's so significant? And do you think it's still as significant now during the coronavirus pandemic as it was before?
It matters because the credit rating from the Moody's, Standard & Poor's and Fitch, they're the three main rating agencies, are a benchmark, if you like, for investors to invest their money. They're an assessment of risk, if you like. So if you've got a AAA credit rating, as it implies that you're a good credit, you're very, very unlikely to default on your debt. You've got a sound economy. You're growing strongly. The policy and the rule of law, if you like, is also valid. So that's what a AAA credit rating means. Taken to the other extreme, say junk status, which like Venezuela, to use that as a high-risk investment strategy. That's why their interest rate settings are, many tens of percentage points higher than ours, that you do still may want to invest there, but you know that with a junk status that you're going to be having a greater risk of investment. So at the margin, going from AA to AA plus, for example, if we got a downgrade, it probably wouldn't mean a huge amount, but to use a cliche, is that the slippery slope to something more worrying?
And if we look at the other markers of how the economy is going, what do you make of what we're seeing in international reports from US, UK about business confidence?
Yeah, we've had some good numbers overnight again on the purchasing managers index, as they're called. They're sort of a measure from the business sector, what they're seeing for the economy, selling prices, new orders, exports, things like that. And of course, they got hit very, very hard. Record lows, record falls in the months of March, April. And now we're getting the May and the June data. There's a turning point there. We're not quite back to where we were, but as you mentioned, throughout the US, throughout Europe and parts of Asia, these purchasing managers are saying that conditions are looking a little better. It's only 1 month at this stage, and it's probably just a knee-jerk reaction to the fact that things are starting to open a little bit. But again, like the AAA credit rating, you'd prefer to see these numbers going up rather than down, because there's a just tentative sign that there's a turning point happening in the global economy, not just here in Australia, but global conditions are starting to turn.
And just back home, there is this general push that people want that JobKeeper support extended beyond September. Also, those bank loan deferrals potentially extended past September as well, to kind of ease that idea that we're just going to be going off a cliff then. Do you think that would help keep economic certainty going, keep business confidence up?
Yes, that's the big question right now that I'm sure Mr. Morris and Mr. Frydenberg and others are thinking about, and the Reserve Bank as well, that as the economy slowly starts to turn here, we get better news from obviously a very low starting point, that what happens when JobKeeper, JobSeeker revert back to where they were? What happens when the loan holidays, if you like, for not just mortgages, but for small business, don't forget, also end at the end of September, early October? And even things like the laws to do with evictions in residential property come to an end too. Are we going to have this sort of unholy mess where people are all of a sudden getting evicted in October, of course, with all the dreadful problems that ensures? So I think we've got to see now that to get that growth momentum through to the end of 2020 and certainly momentum into 2021, we'll need more to be done. We need more money in the economy. And while we are getting some tentative signs of an improvement, we really want to lock them in. You know, the fall in GDP, the deterioration in the labour market in the last 3 or 4 months has been huge. We need more than just 1 or 2 or 3 months of better economic news. We need the government to step in and provide support as well.
Have to leave it there. Stephen Koukoulas from Market Economics, thank you for your time.